The other day, I released a video about the 5 best performing stocks so far this year in the S&P 500. So it only seems natural for today's video to be the 5 worst performing stocks so far this year in the S&P 500. And you may be surprised about some of the companies on this list. So let's get right into it. But just before, I wanted to say that once you've watched this video, leave a comment and let me know which of these companies would you invest in if you could only pick one. So which of these worst performing companies that I'm about to tell you about would you bet on to do well in the future? In 5th place, we have a company called Cirian. They're a global human capital management software company. So that basically means they provide software to their customers, which allows their customers to manage the entire life cycle of an employee. So that's all the way from recruiting someone to promotions to paying them and everything in between. This company went public in 2018, and from 2018 to 2021, they've actually done pretty well. But since the start of 2022 all the way to today's date, they're down by 43.02%. So year to date, they're not doing too well, and that means they come in at number 5 on this list. And just in case you wondered, this company does not pay a dividend. In at number 4 is a company that we all know, and that is Etsy. Etsy are a massive global e-commerce company, and they specialize in handmade, vintage, and craft items. And year to date, this stock is down by 48.72% as of time of filming. I'm not too surprised about this one actually, because recently Etsy have put their fees to their sellers up, basically meaning Etsy keep more of the profit that the sellers on the platform are making. And as you can imagine, the sellers on Etsy are really not very pleased about this, and they're actually striking and signing petitions to get this changed. During the height of lockdown, Etsy stock was absolutely soaring, but I suppose it's not too surprising that it's now coming down a little bit following getting back to a bit more normality and moving out of lockdown. Let me know what you think about why this stock is not doing so well year to date, and what you think the future of this stock is going to be. And also, just to mention, this is not a dividend paying stock. The 3rd worst performing stock of this year so far is another huge household name, and that is PayPal. Just in case you didn't know, PayPal offer a digital payment system worldwide. So they offer online transfers, and it's just an alternative to the traditional paper methods. And year to date, PayPal are down by 51.48%. They've been falling since their peak in July 2021, and they continue to see some steep falls. PayPal posted mixed results in the last quarter, and they said that there were several factors that they believe to be the cause of their stock declining. These reasons included the general feelings towards high-tech stocks, the high interest rate, the increasing competition, and just the overall macro environmental situation that's occurring right now. Following on from our trend of this video, this company also does not pay a dividend. In 2nd place, we have EPAM Systems. I hadn't actually heard of this company before researching this video, but I've noted down that they specialize in product development, digital platform engineering, and also digital product design. And this stock is down by a massive 55.21% year to date. But I will say they do seem to be trending up now since they hit their low on March the 4th, which is when their shares closed in the red, really in the red. And that was because of the escalating crisis that was happening and this company's decision to shut down their operations that they had in Russia. They also do not pay a dividend, surprise, surprise. And they have actually said that they currently anticipate that they will retain all available funds for use in the operation and expansion of the business. And they do not anticipate paying any cash dividends in the foreseeable future. So those were the 4 worst performing stocks in the S&P 500 of the year so far. So that means we just have one more to go. Who has been the worst performing stock so far this year? And if you've listened to any stock news, you've been watching YouTube, or you just follow the stock market in general, you can probably guess who it is. So pause the video and leave a comment below and see if you're right. And it's Netflix, who at time of filming this video are down by 62.76%, which is kind of mad. Since November 2021, this stock has just been plummeting. And on Wednesday the 20th of April, so not too long ago at all, depending on when you're watching this video of course, the shares fell by 35.1% in a given day, which means they recorded their worst day ever since 2004. So it's really not going too well for these guys right now. And that was after they reported losing subscribers in the first quarter of this year. And this actually wiped $50 billion off the value of this company, which is crazy. It seems like a lot of investors of this company are worrying right now and selling out of their position following the report. Let me know if you're one of them. I think there are a variety of issues here and a variety of reasons as to why Netflix is going down and not doing too well. I think there's increasing competition, which is causing perhaps a little bit of market saturation. I think there are competitors that are perhaps offering cheaper alternatives or maybe even offering something a little bit more interesting to the customer. Netflix themselves have said that since pulling out of Russia, they have lost 700,000 subscribers, which of course is going to see an impact. And we've got all of these macro factors as well, if you will, such as an increase in inflation. If you're watching this video and you're feeling a little bit down and like you want some good news, perhaps you want to know what the 5 best performing stocks in the S&P 500 year to date are, no problem, I've got you covered. Watch this video here.